Hi, and welcome to the Executives Exchange, a podcast of the Executives Club of Chicago. I'm Dorri McWhorter, President and CEO of the club, and I'm very excited for today's guest and the conversation we're going to have. Today, we're joined by my friend and 22-year participant in the club's annual economic outlook, Dr. Bob Froehlich. Thank you for being here, Dr. Bob.
It's my pleasure, Dorri.
So, Dr. Bob, well, I've always known you're the man, but we all learned that you're the man when the Dow hit 50,000. So you had predicted at the previous annual economic outlook that the Dow would hit 50,000 at the time of the new economic outlook in 2026. It came a couple weeks later, and it hit 50,000. So first of all, what was that like for you?
Yeah, well, it was fun for a day. But
For a minute.
But I have learned. Yeah, look, these markets move so fast. You're right one day, wrong the next, and conversely. And I learned in this business long ago that today's peacock is tomorrow's feather duster. So you don't read those headlines too long. I think the important thing is not the number that someone picks. It's what's the thought process. And I think too many times as investors, we're so focused on reading the headline, we never read the story. I mean, the whole thing, I mean, my whole premise at 50,000, even though the number was startling, that's what got people's attention. It wasn't that. It was about how vibrant corporate earnings were going to be. And it was going to be that the global recovery was actually working. So back then, those were sort of the two pieces that I saw. That's not what many people focus on. It was just, 50,000, that's kind of crazy. But it's with everything. I think that we too many times let the headline become the story as opposed to what's the fundamental building blocks of what created that story. Like, don't tell me you think it's 50,000. Tell me what in the world you could be thinking that got you to go to the 50,000. I think that's really the key to being a successful investor is to don't just read the headlines. You got to read what's the building block to get you to those headlines.
I appreciate that so much, Dr. Bob, because we are very familiar with you because I personally have been a member of the club for over 20 years. And every single year I was looking forward to hearing and seeing you on stage at the annual economic outlook. I have to say that event was my very first event with the club as well, back in the turn of the century, I'd like to say. But let's take a step back because some of our audience may not know who you are, but would love to explore your background and how you got to this point and being able to be such a wise contributor about the investment landscape.
Well, it's everyone's career makes sense when you look backwards. It never makes sense when you're evolving that. I actually started out in the public sector. It was I was the CFO of a water and sewer utility district in Ohio. I was very, very fortunate that I became the youngest city manager in Ohio, not because of all my talent, but because their number one issue was dealing with water and sewer issues, and I was the only candidate that had water and sewer experience. So go figure. And so I did that. And as we were a new city, and so we did a lot of stuff with issuing debt, and that opportunity led me to get into public accounting, which I know shared your experience in public accounting with Ernst & Winnie at the time, as I spent so much time with doing that, and spent some time with them, and a lot of time on Wall Street with rating agencies trying to convince them to buy that. And that really resonated with me, and I really became more fascinated with the investment side of the business. And I joined Kemper Funds and Van Kampen, and I joke I had 9 different business cards from Wall Street in the same desk. Never moved, but keep getting these new business cards. Yeah. So it's been nice for me because then when Deutsche Bank finally acquired us, to have a sort of a global perspective. So I think what really I'm so blessed and fortunate that I started in the public sector. So I have that ability to look at things from a public sector perspective and a private sector perspective, and also, the time spent as a consultant with Ernst & Winnie, the experience is so amazing because you're challenged by the people below you as much as the people above you. You're always recruiting the best talent you can find, and then become part of a global entity. I'm pretty blessed to have been the ability to go to 107 different countries and, provide investment advice and meet with clients, both retail and institutional. I just pinch myself afterward. It all makes sense why I started in the water and sewer district now, but it sure as hell heck didn't, back then when you did that.
Well, what it shows is that it gives you great perspective though, right? And so you can, to your point, look at what's underneath some of the headlines and really start to dissect that, because you're bringing a perspective that's been informed by your clearly all the different previous roles. So as we look at the markets now and everything that's happening, we started, we hit the high at the beginning of 2026 with 50,000, and now we're seeing that momentum slow down. So what do you think is happening? Are in terms of that shifting landscape, given, I need to strike this word from my vocabulary forever, given global uncertainty. We hear uncertainty all the time. I'm like, last time I checked, nothing was certain, by the way. Yeah. But business leaders talk about having that uncertainty or clearly not the reliability that they may have thought they've had in the past. So what are your thoughts around what we're seeing now from that high point of 50,000 and now what we're seeing, how that's moving and shifting?
At the end of the day, it's never been the smartest or the strongest. It's those that are most adaptable to change. That's who survives.
Absolutely.
So has anything changed? Well, of course it has. It's changed dramatically, but it shouldn't change the way you think, and it shouldn't change the way you run your business. Look, people should never look at an event and say, well, that means I should expand or not expand. That means I should launch this product or not. No, those events may tell you how fast or how slow you want to go, but they don't drive your direction. They don't drive your strategic vision on where you want to go. So in terms of, what has happened since January? Well, obviously, no one saw the war. No one saw, inflation spiking due to energy costs from that. But that doesn't change anything other than, I may be a little early on my forecast. I'm not going to be wrong. I'm going to maybe early, but it just changes some of the pieces, but it doesn't change the ultimate direction of where we're going, both in the economy and with the market.
So when you think about and look at the different sources of some of this economic news, how do you think companies should be focused on those types of sources, or which types of sources that they should be receiving this information that they're making critical business decisions about?
No one should be making business decisions based on backward-looking information. Mm-hmm. And that's the end of the day. Look, there are 300 economic releases every single month. 300. I mean, they seem to just create a new one. What is the Philadelphia Manufacturers Index, and why do I care what's happening in Philadelphia? I'm just kidding. I love Philadelphia, but but that's 3,600 a year, and then basically, we're at about 6,500 or so publicly traded companies when you combine NASDAQ with New York Stock. So that 4 times the earnings report, that's another 26,000. So if you think of just those sound bites of economic releases and earnings, that's like 30,000 sound bites a year, and the only thing I know for sure, those sound bites are going to make the market go up and down. If you're basing your business decisions on those, you're going to have a volatile direction. So to me, it's compartmentalize it and say, okay, it's backward looking. It tells us where we've come from. It's valuable information. Sure. I don't want to say it isn't, but it doesn't tell you what's going to happen in the future. And so I think the issue becomes, the stuff that happens so frequently we focus on so much, and it's the stuff that happens slower that really drives product. And when I say drives product, no one spends time focusing on demographics and the demographic changes that are going on here and going on around the world. Yet at the end of the day, if you're a consumer company, it's not the consumer price index that's going to determine where you're going the next 5 years. It's the demographic shifts that never make the headline anywhere. So it's a combination, understanding that information, and maybe that tells you if you want to speed up or slow down a little bit, but it isn't giving you the roadmap, and it isn't giving you the direction of where you want to head or take your business.
So I appreciate that, Dr. Bob. Personally, being a CPA, I do appreciate that. The forward-looking doesn't necessarily guarantee, or backwards-looking doesn't guarantee future results, right? But What type of information in terms of what business leaders should be focused on and should be thinking about? But I also want to talk more broadly to, yes, business leaders, but also the everyday consumer. What are the things that they should be thinking about too as we're looking at the economy? And I want to separate the markets from the economy, but let's just talk about the economy for a second.
Yeah. Oh, everything, to me, everything is global and everything is interconnected. And it doesn't matter what that interconnectivity is. It's there, and so everyone has to look at everything from a global perspective. Whatever is happening anywhere in the world is having some impact everywhere else in the world. So I think that the biggest mistake that people make is to think that they can silo themselves away from what's happening on a global perspective. And you simply can't do it. So from an economic standpoint, you can't say I'm only interested in what's going on in the United States. You have to be interested in what's going on globally. And so many of the businesses in the U.S., have businesses around the world that, you have to, no matter what type of business you're on, you have to think globally. You can act locally, but you have to think globally, and you can't escape it. You know that I owned the Kane County Cougars for 10 years. Probably the best. I didn't follow my own advice, because nothing. If you think about it, what could be more local than owning a minor league baseball team? I mean, that screams local. You don't have to worry about anything global. Well, and we didn't. As our team store was looking post-COVID, we had a really great giveaway event, and they found a great vendor that gave it a great price. Owners love it when we find something at a really, really great price. But we didn't take that think globally perspective and didn't realize that there was something going on called supply chain disruption. And so when it came time for our great event in July, we found out that our giveaways were sitting outside the port of Los Angeles because like all the other big cargo ships, they couldn't get in there. And so, we just thought little old Kane County Cougars don't have to worry about anything going on around the world. And we didn't care about global disruption, supply chain disruption. It didn't impact us. Oh boy, we had a few unhappy fans, but we made up for it. We got them their stuff and gave them a free ticket. So it all worked out in the long run. But it's global. Everything is global. You cannot isolate yourself from the events going around the globe. It'll come back and bite you.
That's such a great example, because we often hear everything positioned as U.S. versus global, or local versus global, or whatever the case may be. So I think that's such a great example of how we have that interconnectedness and that interdependency happening. We'd like to take a moment to thank Shure Incorporated for being a proud sponsor of the Executives Exchange podcast. Shure is the gold standard trusted by podcasters, musicians, and broadcasters around the world. Whether you're recording at home or in a professional studio, Shure microphones deliver clear, reliable audio every time, meaning fewer distractions, better conversations, and a more polished experience for your listeners. Visit Shure.com to explore their full range of products for home use and professional media needs. So I want to shift a little bit from sort of the economic piece of this, but I really appreciate how you've learned those lessons. And I know that you've spent time trying to teach others those lessons with what you've done in the past with a student investment conference. So talk about that, because I'm like, why wasn't I a student at that time to learn this from Dr. Bob? Yeah. But talk about how you have thought about, really providing this knowledge to others.
Yeah, it was very interesting. I went to undergraduate at the University of Dayton. I was very fortunate. I was on their board of trustees. And so I got to spend time with the various deans and knowing the dean of the business school and one of the professors of finance. And we were just chatting. It'd be fun to do something unique, something that no one else had tried. And it was just at the time that Davos was all in the news, and thought, wow, what a great thing that no one's giving speeches, just people sitting on stage, interacting with each other. And it's because I thought, wow, wouldn't that be so cool if you could do that, but instead of at Davos, do it at Dayton, and instead of in the audience, CEOs have the students listen to that, and everyone said, well, that'd be cool, but that would never happen. And well, when I was in the business, I was on what we call the buy side of the business. So we were the mutual fund. So we were buying stocks and bonds from different companies. So all the different companies would come to my door. It's a great job to be on the buy side, but it's always fun. It's like being a buyer, everyone comes, they want to sell their stuff. But the industry is so great. So Merrill Lynch would come, Goldman Sachs would come, Morgan Stanley. They'd all want to sell, and they're all such great people, and they always would end with the same thing: is there anything I could ever do for you? And we always say no. Yeah, that's it. And so when they ended a conversation, they said, is there anything I could ever do for you? I said, yes, would you come to Dayton on April 15th and speak to students with some other people? And so it just, one thing resonated another. And the beautiful thing was they weren't allowed to have a speech. No speeches were allowed. And I moderated the event, and it just came, and we had this discussion, pretty much like we're doing. And only we did it in front of students. And we did it for 10 years at the University of Dayton. And the professor of finance there moved on to Quinnipiac University, and we moved the conference onto there. And so it was a great experience of the students getting a chance to hear from people that they usually see on CNBC and CNN, and have the ability to do that. And the students got to ask questions. So it was a fun way to give back, and for students to really see a side of these strategies. And we had CEOs, and we had strategists, and we had economists, and all those different things are there. But again, every one of us has to do what they can do to make sure the next generation of whatever industry we're in, we're doing all we can do to make sure that next generation is even more prepared than we were when we assumed the roles we're in.
No, I love that so much, because I think about, one, the benefit to those students to hear from the folks that are actually participating in the markets that they're studying about, right? That they're learning about. And to have this platform of the Student Investment Conference for 20 years between the two universities, I just think about what tremendous impact you've made across those students for that long of a time, as well as how you continue to think about, because what I appreciate about when you join us at the Annual Economic Outlook is that you give us your predictions, but you also provide us with, quite frankly, intelligence, right? And because I remember years ago that I had first learned about ChatGPT because you mentioned it in your remarks, because I feel like you've always educated the audience, not just told them what to think, but really gave them perspective that allowed us to further think and understand what's happening and what we should be and what we can do about it. So thank you for doing all that, Dr. Bob, for officially for 20 years, and then for 20 more years with the Executives Club as well.
I appreciate that. So much of it comes from, as I said, on the buy side of the industry, so representing the mutual fund industry, as people were selling their stuff to us, we also were selling our stuff. So mutual funds, and in our case, our mutual funds were sold through financial advisors. And quite frankly, that's really where I learned the importance of messaging what's going on and the importance of looking into the future. Because, for example, we would have a mutual fund, and we would love financial advisors from Merrill Lynch to be selling that product, or from, as I said, Morgan Stanley or Smith Barney or LPL or whatever. And as the chief investment strategist, it was my job to sort of explain why this is a good investment. And I'll never forget, because I was in an office in Manhattan, and and I gave all these reasons and everything, and the financial advisor says, that's all well and good, but my client isn't going to understand anything you just said.
Exactly.
And so it really resonated with me early on in my career that if you can't message what's going on, if you can't explain it in such a way that people can understand and relate to it, it's not gonna add value. And so I learned early on that it's really, how do you connect those dots and how do you make that understandable? And again, it's make sure you're not focusing on what's happening now, but what you see happening in the future. That's why the ChatGPT is so important, because it's not just, if all we're doing is figuring out where we are now, we're never going to figure out where we're going. So it's the ability to make sure everyone can understand it, it becomes explainable, we can connect the dots, but more importantly, you start creating a roadmap for what could happen next.
I just so appreciate you, Dr. Bob, because what I think you do so well is break down these very complex concepts to everyday folks, even like myself, right? But we hear, so of course, in the news, right, the inflation and interest rates policies, and which change on a daily basis, or the perspective around them change on a daily basis. How do you see those type of policy discussions really impacting what business leaders have to do from a decision standpoint and consumer confidence as well? How do you see those things intersecting?
Yeah. I mean, I think, let me start with interest rates.
Sure.
I mean, I think it's we always get so focused on, what's happening at the next Fed meeting, or are they going to move 25 basis points? Could it possibly be 50 basis points? And I remember, as you do back in the day, oh my gosh, they're having a special meeting in between, they would do something. They did something that wasn't scheduled, and the markets would, it's never really been about that move. For a business leader, it's about the direction. And it doesn't matter if they're moving 25 or 50 basis points, and it doesn't matter if they do it in between meetings. But fundamental issue, are rates heading up or are rates heading down? I mean, to me, that becomes the barometer that you look at. And you're not going to get it right all the time, but I will tell you, you have a much better chance getting it right if what you're trying to focus on, do I think the future of rates are going higher or lower, as opposed to guessing each incremental move that's happening between now and then. So again, it's taking that broader perspective, especially from an interest rate perspective. It's really, where's the ultimate direction of rates going, not what the actual number is going to be.
So I would say, Dr. Bob, if we're thinking about where we are given the course of the year, so we started off with the annual economic outlook for January 2026. If you had to give your perspective on, you had an amazing, your comments at that time, which I hope our listeners will go look at on YouTube, because we do have those posted. Would love to, the quote that stuck with me, and I'll say it wrong, so you'll have to correct me. I should let you say it so that I don't get it wrong, because I choose a different animal, I think, than you did. So let's revisit that quote, because I want to ask a question about that.
It's not the deer that's crossing the road, but it's the road that's crossing the forest. So basically, it's stepping back and taking a broader perspective. I think so many times we take such a narrow view that we find ourselves answering the wrong question.
I love that, and I'll get my animal right, because I was like, okay, it's not the chicken, it's not the fox. I should know a deer. I travel from Wisconsin to Chicago all the time. I should know there's plenty of deer. I should remember the deer. So, but taking that perspective at this moment, what are you seeing from a broader perspective than the forest today?
Yeah, I think the broader perspective is the impact on energy prices, and that's the one wild card out there, because, look, we had inflation. I think inflation was being overstated, but there's no doubt about it now because of what's happening with the war. So that issue becomes then a new piece of information, a newer piece of information. But again, that shouldn't determine what you do, what you don't do. You certainly might want to slow down, speed up some other things, because all news that comes out that may appear to be on the surface bad doesn't mean that you don't do something. And in fact, I mean, if you think of from an investor standpoint, the issue is you always want to buy when everyone is selling and sell when everyone's buying. So does that really mean that you want to expand your business when everything is great, or is it better to expand your business when everything is not so great? So to me, in terms of if you're looking at doing something with the consumer, do I want to really expand when the consumer is hitting on all cylinders and the price of oil is back down to $50 and everyone is happy, or do you do it as a contrarian standpoint? So it's not as easy as you think, and that's why, coming back, no one element should be determined. I'm going to do something, I'm not going to do something. I view it more how you accelerate or decelerate based on what that information is. But to me, the biggest new piece of information is that spiking energy cost.
I love this perspective, because what I always hear consistently from you is get your strategy right, and then let these other elements that you hear help you directionally shift what you speed up, what you slow down, or what you might choose to change because of that. And so what are the sort of indicators that you really focus on when making those sort of strategic decisions?
Yeah, as we talked earlier about interest rates, I think the direction of monetary policy is really, really important. I also really focus on what is the earnings trend, because I think not focusing on any one industry, not focusing on any one company, but what are the what is the trend of earnings, because that really tells you more, not just about what's happening with monetary policy, but it's telling you what's happening with the economy. It tells you what's happening with the consumer. It tells you what's happening with the global economy. So you don't even have to be an investor, but if you really want to get a good feel for happening, follow what companies are saying, follow what they're doing, because what ultimately they are the ultimate global scorecard. They really are. There's a lot of great indicators that are out there. There's a lot of not so great indicators that are out there. But when it's all said and done, I think that the melting pot of all that is really corporate earnings. And so, whether you want to invest in a stock market or not, there's a lot of great information that comes out of that in terms of where you're heading, where you want to go. Because the other information, you can, if you want reasons why not to expand a business, I can go to last week's economic releases and give you 10 reasons. Conversely, if you want reasons why to expand, I can go to those exact same economic releases from last week and give you reason to do it. So, it almost becomes, we've chatted before, so many times we don't see things as they are. We see things as we are.
Right.
And so if we're always looking for something negative, I guarantee you we're going to find something negative. But if we're always looking for something that maybe gives us a glimmer of hope, it's going to be there. And it's probably going to be there in that same piece of information.
No, I appreciate that. I have to say, too, and I probably sound like a broken record because everything you say I appreciate. So let's just give them that. Yeah. Let's give that. But, I remember back in my Kellogg days, and we had did our capstone project for the end of our MBA program. And what I learned, the one thing I took away from that is that there wasn't one right or wrong strategy. It's just the one that you committed to. Right? Yeah. That if you committed to it and did the right things align with that, then whatever that strategy was would be successful. Yeah. Right, exactly. And so I think about the same thing as we talk about, corporate leaders, because again, we often say that there's the outlook is uncertain, and those types of indicators that they may be looking at, they're true today, not true tomorrow. And so when you're thinking about businesses and the leadership, because to your point, if we're looking at corporate earnings, those are business leaders that are making those decisions to actually produce those earnings. What should they be thinking about, though, as they're looking at this environment, looking at the economy, looking at the market, looking at all the different moves that's happening in the market? What should they be thinking about?
I mean, they especially. Let me start with public companies. I mean, they have to think of it sort of like a teeter-totter, if you will, because you have to have a long-term vision. So it doesn't matter what's happening right now. You better have, and maybe the definition of a long-term vision changes for each company. Maybe your long-term vision is 2 to 5 years. Maybe it's 10 years long. It doesn't matter. You have to have it. But you also have to take care of your stakeholders and shareholders in the short run. So that becomes the dichotomy. You have to make sure you're successful in the short run to take care of those shareholders and stakeholders. But you also can never lose sight of what's your ultimate vision, because that vision is the toughest thing to stay focused on. But it's the most important, because your stakeholders, your employees, they really don't care what happens quarter by quarter. Right, I mean, they may say they do, but they really care. Where are you taking this ship, and how are we going to get there, and what are we going to do? So those companies, to try to balance those two, and the leaders that are able to do that, they just turn down the volume when all these releases come out. And I mean, that they know where they have to get ultimately, and it doesn't matter what's happening in any given month, any given quarter, really any given year. They have a vision, they have a focus, and if they can empower their employees to share that vision, share that focus, and know where they're going, they're going to be successful. It doesn't matter what the CPI number says, and it doesn't matter what any of the earnings reports are. They have a vision, they will execute to that plan, regardless of what the noise is in the marketplace.
No, that's so true, Dr. Bob. I was just at a conversation listening to a CEO, and he exactly said that, right? He was talking about how for this particular company that they said that they were not going to report quarterly and focus on the longer term because of all the noise that happens quarter to quarter. He's like, that's speculation. I'm talking about what is the longer term vision for the organization? And I do think, it gets more challenging for leaders to lead in that environment as well and be able to have those conversations, or even go as far as say, I'm not going to do certain things quarterly, and well, partially if you're a public company, you can't not do that. However, but I do think that there's opportunity to continue to run the company with that longer term view as well.
Yeah, it is, and it's and even employees they want to be part of something that has a longer term vision, but they also want to be successful in the short run because so much of their compensation is tied on what's happening in the short run, not what's going to happen 10 years down. So it's really difficult to run a big company. It's difficult to run a small company these days, but you could, because you really have to take care of what's happening now, but you also have to take care of what you see happening the next 5 years. The next 10 years. And it's never going to get easy to do that. But I can tell you one thing, it's never going to be certain. If you're waiting for certainty, it's never going to happen, because no matter what that certainty is you're looking for, whether it's what's happening with inflation, what's happening with interest rates, what's happening with geopolitical unrest, no matter what it is, think of it like a balloon. We're going to squeeze this and solve the problem you're so worried about, and we just created two others.
Right.
It's never going to be so clear that you're going to say, now's the time to do A, B, C. It's never about that. It's never going to be all clear ahead, time to go. It's about your vision. It's about your focus. It's about your employees buying into that vision and focus, because there's no way you can get stakeholders to do that if you can't even get employees rowing the same way.
So true. One of the topics that comes up a lot in discussion, and even analysts looking at how companies are spending on AI to determine how that's going to play into their strategy or their ability to compete really going forward. What are your thoughts around how people are looking at whether it's AI spend or investment in AI, and how companies are utilizing AI as a resource?
Yeah, I mean, it's the next big thing. We go back. The internet was a big thing. This clearly is the next big thing. Don't underestimate it. It will change everything. It'll change everything, the way we do, the way we live, the way we work. It's not going to change it tomorrow. It's going to happen over time, and it's not going to mean that everyone's going to be unemployed, because now all of a sudden we're embracing, artificial intelligence. There will be a disruption of jobs. There always is. Any major change that we have happening, you're going to have jobs that are no longer needed because there's a more efficient way to create that same end product, but there's also a more efficient way to utilize those human resources in other ways. And so I look at AI and say, boy, this is as big a change as I've ever seen in my lifetime. But I don't see it as a destruction of every job. I see it as creating a pie in a much bigger way than anyone ever dreamed of. And when I say a much bigger way than anyone's ever dreamed of, I think one of the hidden problems with the global economy is we all don't speak the same language. So, we talk about tariffs. Well, I will call the language barrier maybe the biggest tariff of all, because we don't buy products from different places if we don't communicate in that language. Well, I mean, I think Apple already has now an iPod that can translate, and others are not far behind. So think about what that means, and think about how AI takes that to the next level. All of a sudden, if language is no longer a barrier, how big does the pie get that I can now buy anything anywhere in the world, because I can communicate with any vendor anywhere in the world? So, I mean, as we're focused about the people that are losing a job, I also urge you to focus about how big that pie is going to become, because we're just we're eliminating the biggest tariff of all, and that's the language tariff. It goes away, and I mean, AI is going to fuel that in a bigger way than any of us dreamed possible.
Yeah, I think that's so exciting to think about that, the opportunities. I know that the focus has been on productivity and efficiency drivers with using AI to drive those things, but there's there's not enough conversation yet around the market opportunities, and some of it that people just don't see because you can't see, what you're not. Right?
Yeah.
And so, to get to that point, I think, once people start seeing these use cases as these things unfold, I think about whether it's the internet or whatever technology, the automobile, just open up whole new opportunities for us as a society and humanity, right?
And it happens over time.
Absolutely.
It doesn't happen, and everyone says, well, everyone's going to be so productive. I'm going to say, well, wait, have you used AI recently? I do, and I love it. It's just like, going back 15 years at the explosion of the internet, and I would say, it's so productive. I'm saying, really? I had an analyst that started working on something at 8 a.m, and they got lost on the internet for 7 hours and didn't even get the first question answered. Right. So, yes, will it be productive? It will. Absolutely, positively will. But this is, I think we have to think of this more like an evolution than a revolution. Yes, AI is here. It's not going to all of a sudden make every single person so productive we're going to be able to get rid of 80% of the workforce. It isn't happening. Over time, we'll all learn how to use AI better and be more productive. Just how we all learned how to use the internet and focus our searches, that we became more productive. We weren't productive when it started, and just like we're not productive with AI now, will we be? Yes. Think evolution, not revolution, and it's not going to kill every job. It's going to create a bigger pie than anyone ever deemed possible.
I am so, the world according to Dr. Bob, I so love. I love that world. So as we think about back to January, and you gave your prediction, again, this year was over 50,000. How do you think we get there from here?
Yeah. I think the building block doesn't change. I might be wrong in terms of the time frame, because there's a fine line as an investment strategist between being wrong and being early. I
agree.
I may be a little early. I still think the market, I at 57,067 only because that's the only time kids will listen to me. No one listens to me anymore. But if I can go 6-7, all of a sudden everyone thinks I'm cool.
Exactly.
I had no idea what it meant until my granddaughter showed me. But anyway, so does it still get to 57? Yeah, and I think it does. I'm not sure if it gets there by January of 2027. I think it has a chance. And why? Because I think the drivers are still in place. And the drivers are, I think the economy, even with the uptick and the spike of energy, I think the economy still is doing well. I think inflation, yes, you have the one-off, but I think interest rates, I think the direction of rates ultimately is heading down. There's going to be a change at the Federal Reserve Board. I think the bias is going to be for rates to move lower rather than higher. So I think that economy is, to me, going to be a fuel for the market. I think consumer spending it could do better. I think it will do better as inflation comes back under control. So to me, it isn't about the 57,000. Right. To me, it's about, is the economy strong enough to get the market there? It sure is. Are earnings strong enough? Well, look, our earnings really are fueled by, what's the economic backdrop, what's the consumer backdrop, and more importantly, long-term direction of monetary policy. So to me, those things are looking good. And I think earnings, when you roll back last year, I think corporate America read too many of the headlines, overreacted to the tariffs, and so there were a lot of cutbacks, a lot of downsides. And so now when you roll back that overreaction and start seeing some of the potential productivity gains with AI, I think earnings are going to surprise on the high side. So for me, I always thought the economy was going to be okay. I thought earnings were going to be stronger and so when I can combine those two things, I think fundamentally the market will be up double digits. So, will it happen in the exact same time frame? I wouldn't worry so much about the time frame and the number. Yeah. Focus on what is that building block. How does a crazy guy get to 57,000? Well, he gets there if the economy's doing okay, if the consumer recovers after energy prices come down, and more importantly, with corporate earnings. And I think those corporate earnings are going to be strong enough to move the market forward.
I appreciate your optimism, Dr. Bob, because one, I think we need it in today's world, but I think, you've said this before, it's not about the headline, it's really about unpacking it. And that's what we hope that we can do for our audience and our our members of the Executives Club is to continue to provide them perspectives to allow them to unpack for themselves, right? But then also because we know that their leadership matters in how they are making decisions for their companies and ultimately, driving those earnings and driving those results that we see in the market and really impacting us off, right? So
yeah,
it's wonderful. So one thing we should take away about, if you look, what's your key assessment today?
Yeah. I mean, to me, it's going back to that discussion that everything is global. Go global, go global, go global. Even if you're not global, you are global. So
you're global whether you know it or not.
That's right. So to be able to think globally and act locally, I mean, that really is that's the magic key. And it doesn't matter what that fiber is that connects us. We're all connected globally. And I think that as business leaders, that's the single most important thing. And we have to have a workforce that understands that. It doesn't matter what industry you're in. You are a part of a global fabric that we all have to be a part of. And I think to lose sight of that, I think you lose the vision of where companies have to go to.
I love that, Dr. Bob. And I'll have to say that you remind me of a quote that says that when you pull a thread in the universe, you find it connected to everything else.
Yeah.
So, Dr. Bob, thank you for taking time. And I look forward to reconvening at the Annual Economic Outlook in 2027 so that we can hear more. And here, you're probably going to be a little early again, but
reconvening at 57,000 maybe.
Yes,
we'll see.
For sure. Thank you so much, Dr. Bob.
Thanks.
For more conversations with innovative and dynamic leaders from Chicagoland and beyond, follow the Executives Exchange podcast on your podcast app or subscribe on YouTube. Until next time.